news from Sawyer Merritt. Tesla has officially obtained the permits to start construction of the Giga Mexico plant. They're saying construction could start in as little as a few weeks, but it's up to Tesla to decide. Well, let me restate my original thought on this. Tesla has dialed in the plan for construction on this site. I mean, they've got it all laid out, fully considered in every way, shape, and form. Tom Zhu, he intends to put this phase, the first phase of this program, together really fast. So I'm going with first production in Q1 of 2025. Maybe even sooner than that. They are going to blast this thing up as soon as they possibly can. Now, maybe Elon really did slow it down, and maybe he'll continue to slow it down, and I'll be just completely all wet on this. I don't think so. I think it was the Mexican government that was the real culprit in this. And now we'll see what can really happen when the decks are cleared for takeoff. The National Federation of Independent Business numbers are in, and I think they're absolutely fascinating. We'll take a deep dive into the engine of the U.S. economy and what the engineers, are the owners of these companies, are saying about their businesses and about their prospects. This is Randy Kirk. Please hit the like button. I like it so much if you hit the like button and then hit subscribe if you haven't done it already. And if you're new, this is a great time. If you've watched a couple of times or whatever, and you think the content is right for you, hit the subscribe button. It helps me, and it really helps you to be able to find the program later. Hit notify, because, we've got lots of great programming coming. Tomorrow night, it's Jeff Lutz. Tomorrow morning, I'll be giving you as fast as I can get the PPI information out there at around 7:10 California time. You'll be able to see my analysis of what those PPI numbers mean. And as usual, I'll take a deep dive. And then, of course, you want to get your Cybertruck bottle opener. Time is running out. I'll talk about that more at the end, but the information is down below in the description in terms of pricing, in terms of where to send the money, etc. All right. There are those who think the haters actually become more active after an event like the CT handoff, that there's actually a conspiracy out there that whenever Tesla does something amazing, which the CT is absolutely amazing, that the haters come out and they all get together and they call each other and say, hey, we got to do something right now. Find some really bad stuff. Talk bad about the Cybertruck. See if you can find anything you can find out there that will be negative about the Cybertruck, negative about Elon, negative about Tesla, and then publish that stuff like crazy. As you guys know, I look at I don't know how many hundreds. I should count it sometime. Hundreds and hundreds of headlines a day. I look in so many different places to find every single article that's out there about Tesla and about the economy, about Tesla stock. And I want to tell you, the number and the depth and the horribleness, the nastiness of the headlines over the last 10 days has been much worse than usual. So I don't know if there's a conspiracy. I don't know if the haters just like to take a positive situation and try to come up with a negative, maybe just to get clickbait because they think people will read the article. Whatever the reasons are, yeah, I'm going to agree. The negative stuff has been out there in spades. But long term, that's not going to matter. What's going to matter is how many can they ship and how many can they sell. And that's going to be true for everything, including the Model 3 refresh and the Model Y, all the rest of it. How many can they make and how many can they ship and at what margins? And that's what's all going to come down to. So there are some really serious evidences of brand problems at Tesla. This comes from Clean Technica. Tesla has reportedly topped Ford to become the most searched for auto brand in the United States because their brand is just deteriorating. Behind Tesla and Ford is Toyota in third place in the United States. Globally, in terms of the number of countries where an auto brand is number one, the story is a bit different. Toyota is number one for the fourth year in a row, though Tesla, whose brand is being destroyed nationally and internationally, did pop up to second place, just above BMW. And that bumped Mercedes-Benz out of the top three for the first time since the analysis began in 2018. So as the analyst wrote, it's an incredible turnaround. Tesla that doesn't make sense. Tesla has made a great turnaround from not making the rankings at all in 2022 to second place in 2023, with 29 of 155 countries listing Tesla as their #1 car brand in Google Trends. Well, what do you know about that? All right, the Kobayashi letter, as usual, I have some good things and bad things to say about this. So I'm glad he found this information. Here's the information. You think we're ready for a Fed pivot? In other words, that tomorrow the Fed would be at least a little dovish. Well, Fed Chair Powell has often pointed to the core services X housing inflation as the most important category to watch. I got to remember to write that down and look for this next time. But maybe the Kobayashi letter will let me know next month too. Anyway, in the latest CPI report, core services X housing inflation jumped 0.44 month over month. So that would be a run rate of about, well, it says here, on an annualized business, core services X housing is now, and he says, an alarming 5.3%. This is well above the 3.1 headline number and much higher than the 2% that the Fed is looking for. The fight against inflation is far from over. Well, okay. We've known services has continued to be much higher than products. We know that for a fact. We know that the big thing that's coming down is oil, gas, natural gas, etc. However, interestingly, natural gas, when it gets out of the utility for some reason, is one of the things that's going up the most. But you got to look at the items specifically. I talked about this morning in the show. If you didn't see the show yet, go back and take a look at this morning's show where I go into the CPI numbers in greater detail. A bunch of what he's looking at right here has to do with car insurance, which was up like 18% in 1 month or so, I don't know, 180% for it's a huge increase in car insurance. And this was all around the terrible problem that they were having buying cars to replace cars when the car was totaled, and also buying parts during the post-pandemic period. You can remember how high the price of used cars got, how no new cars were available, and how parts were completely impossible to come by. So what happened? The prices went nuts. The insurance companies then go to they've got a year of those horrible, they probably lost money because of that. They lost money in 2022. They went to the insurance agent in each state. They went to the state agency, and they said, we got to raise our prices. We got to raise our prices because look how much money we lost. And here's the formula. And the states go, okay, rubber stamp. Yep, you got to raise your prices. So then they went on and raised prices. Well, okay, except that now, this year, as things start to normalize, used car prices are falling almost faster than anything else. I'm sure that we're also going to see the body shop, parts prices also starting to come down rapidly. But unfortunately, by end of 2023, might not begin to see significant decreases in the amount that these companies are paying, and therefore their profits might still be a little bit not quite what they can expect from the governing agencies to in other words, there needs to be enough profit to where they could ask for actually to go lower on insurance policy. So I talked to a guy that's been in the business for a very, very long time, and he says they're looking at flat next year, but then the following year we could be looking down. Well, what's it going to take? It's going to take almost all this year to get to that flat. So this insurance number is going to keep coming up month after month after month in the CPI, and it's going to affect things. So there's things like that are going on that you have to take a look at when you're trying to figure out what the total numbers are. You can't just look at the raw numbers. I don't know the name of the guy who does this, but you have to dig in a bit. You have to think it through. All right. The National Federation of Independent Business, Small Business Optimism Index decreased by 0.1 point in November to 90.6. It marks the 23rd consecutive month below the 50-year average of 98. Okay, so 98 to 90.6, that's not very good. 22% of owners reported that inflation was still the single most important problem in operating their businesses, unchanged from October, but 10 points lower than this time last year. So it's starting to become less and less of an issue. Doesn't mean that it's gone away. Again, In particular, these guys might be looking at labor inflation. They might be looking at services inflation, not just product inflation. All of this, rent inflation on I don't know, most commercial and even retail, at least in California, retail rents are not going up that much in the commercial rates. Anyway, goes on to say, job openings on Main Street remain elevated as the economy saw a strong third quarter, said NFIB chief economist Bill Dunkelberg. However, even with the growing economy, small business owners have not seen a strong wave of workers coming in to fill these positions. Inflation also continues to be an issue. All right, so that paragraph didn't make a lot of sense to me. So the strong economy hasn't brought in more workers looking for jobs. Well, no, the strong economy means there's still not enough workers to go around. Okay, so the workers are not going to come back into the economy. I don't think we're going to see a massive number of people that are sitting on the sidelines that are going to say, okay, I'm ready, now I'm going to come back. People are doing it other ways, and they've gotten used to not working. These could be people that don't necessarily need to work, or maybe they're retired, and some of them have been coming back into the workforce, but they're not now. Anyway, in general, no. As long as the economy is strong, we're going to continue to have this shortage of workers. And anyway, it goes on. There's more to the story. So key findings include owners expecting better business conditions over the next 6 months increased 1 point from October to a net negative 42% seasonally adjusted. So way more people think it's going to be bad than think it's going to be good. A net negative 17% of all owners, seasonally adjusted, reported higher nominal sales in the past 3 months. So most of these companies are seeing lower sales is what you have to reread these things. 40% seasonally adjusted of owners reported job openings that were hard to fill. That was down 3 points, so getting a tiny bit better. Seasonally adjusted, a net 30% of owners plan to raise compensation in the next 3 months, up 6 points from October, and the highest since December 2021. The net percent of owners raising average selling prices decreased 5 points from October to a net of 25. So some are raising, some are lowering, some are not going either way, but a net negative 25. To a net 25%. Then the net percent of owners who expect real sales to be higher increased 2 points, but it was still a net negative of 8%. So more thinking their sales are going to go down than think their sales are going to go up. So as reported in NFIB's monthly jobs report, owners plan to fill open positions. The owners' plans to fill open positions remain elevated, still planning to looking for new people to fill new jobs in the next 3 months. Overall, 54% reported hiring or trying to hire in November. Of those hiring or trying to hire, listen to this, 93% of owners reported few or no qualified applicants for the positions they were trying to fill. That's a huge statistic. So can't find anybody still, even though the market, people talk about the job market is shrinking and, we're going to have a recession in January, a recession in March, because the job market, it's not what it was. No, I'm sorry. This is the engine of the country. These small business owners, 54% tried to hire, more than half tried to hire somebody in November. 93% of those said few or no qualified applicants. It was a net negative 17% of all owners, seasonally adjusted, reported higher nominal sales in the past 3 months, remaining the lowest reading since July of 2020. The net percent of owners expecting higher real sales volumes improved by 2 points, though. So their sales are not doing that well, but they're thinking it's going to do better. So that's why it's called the optimism report. The net percent of owners reporting inventory gains increased 3 points to a net negative 3. So they're not adding inventory. Not seasonally adjusted, 14% reported increase in stocks and 16% reported reductions. So basically, zero. A net 0 viewed current inventory stocks as too low. They think their inventories are fine. By industry, shortages are reported most frequently in retail, finance, and services sectors. Shortages in construction have been reduced because home sales have slowed dramatically. A net negative 3% of owners plan inventory investment only, a net. So less people are planning to buy inventory than they were the previous month. The net percent of owners raising average selling prices decreased 5 points to a net 25. So 25% are planning to increase prices in the next few months. And then seasonally adjusted, a net 34% of owners plan price hikes. Seasonally, what did that mean? Raising, decreased. You know what? I'm sorry. I hope you understood that. Maybe you can tell me in the comments below what I just said. Then finally, we get the frequency of reports of positive profit trends was a net negative 32%. That's unchanged from October, but 32% net. So some expecting increases in profits, some expecting decreases in profits, net negative 32%. So most expecting decreases are staying the same. Among the owners reporting lower profits, 36% blamed weaker sales, 16% blamed the rise in the cost of materials, 14% cited labor costs, 9% said it was because of lower prices, and 6% cited the usual seasonal change. 5% cited financial costs. So now there's another number. You see, you've got to grab these numbers. Only 5% of the small businesses in America are concerned about their profits or having their profits go down because of higher interest expense. This is important. It's what I've been talking about. The interest rates are high, but they're not that high. Anyway, 14% cited 60%. I'm sorry, for owners that are doing better, 60% said it was because of higher sales volume. 14% said because they were able to raise their prices, and 11% cited usual seasonal change. I said finally, but actually there's one more. 2% of owners reported that they're borrowing. Oh yeah, this one. This is again 2 months in a row. 2% of owners reported that their borrowing needs were not satisfied. Let me say 98% of all small business owners in the country have the credit available that they need. All right. 25% reported all credit needs met, and 63% they were not satisfied in the current loan. A net 8% reported their last loan was harder to get than a previous. 8%, a net 8%. So some said it was easier, some said it was harder. A net 8% reported it was harder to get than in previous attempts, but they didn't say it was impossible. 5% reported their financing was their top business problem. 5%. Might as well be zero. I mean, this is not their business problem. Their business problem is finding people and the fact that there's still inflation eating away at some of their opportunity. A net 25% of owners reported paying a higher rate on their most recent loan, only 25%. So moving on, the VIX is at the lowest point since the pandemic. Folks seem to be really clear about future rate cuts and no more increases. That's what the investors are thinking. So there's a lot of calm in this season of peace. So where are things now in the pre-market? Let's take a quick look here. We have got, starting with Tesla, we have Tesla in the pre-market is now down 11 whole cents. Okay, so I would call that flat. We have, if we then go into the bonds, let's go into the bonds. Bonds were down heavily today. Last time I checked, they were continuing down, but let's see where they are. Yes, they're continuing down, but barely. I would call the 10-year is flat. It's down 0.002, but it's sitting at 4.2. Okay, we're heading down into that 4.1 territory again, where we bottomed out last time. And then if you look at the 2-month, it is up 2 basis points. Again, it's pretty interesting to look at what I'm seeing here. I don't know if I've ever shown you this. Can you actually see what I'm looking at here? What's interesting is all of the short term are in the green. All the short term are going up, and all of the long term are going down. This is the inversion we've been talking about. Now, the 2-year literally is slightly down also, but the 1 year, the 6-month, the 3-month, the 2-month, and the 1 month are all up, and everything for the 2-year is down. And it's so weird. I've never seen it look like that, but it's been like that for the last hour. Anyway, it is, yeah, we're still, you know, my position, those greens, all those ones that are green, those are going to turn red. Okay. It's a matter of which day. It has to happen. That's my opinion. is not investment advice. But if you take that advice and it works for you, please call me and give me credit. No, I'm kidding. I'm sorry. Never mind. Okay, oil right now is at, well, that's funny. It just went away completely. There we go. Oil is up 14 cents. It is sitting at 68.75. Remember, we bottomed out last time and around the 67 price. I can't remember exactly, but right around 67. And we've got natural gas down again, another $1.43. I'm sorry, another 1.43%. Sitting at $2.27. Yes, gold is up slightly, but still under 2,000. And copper is down another 0.2% as well. We have got the dollar dipping a little bit, waiting to see what happens tomorrow. We've got the Bitcoin at 41,377, in case you're paying attention to that. And then we have the market. Okay, we've got the Dow is up 47, which is 0.13%. We've got the S&P future up 650, which is up 0.14%. And we've got the NASDAQ futures, here we go, is up 31, which is up 0.19%. So right now, the NASDAQ is up a little bit more than, in a percentage basis, than the Dow or the S&P, which would be back to a more normal expectation. I don't go into all of the the magnificent seven in this particular version of the show. I do that in the mornings. So we'll take again a look tomorrow and to see if we're continuing to see this rotation out of the Magnificent Seven. They did okay today. I don't know if they did as well as the markets. Okay, and then quickly going back for one more second to still down 15 cents now. Okay, not really moving very much in the pre-market. All right, so first of all, earlier today, Brian White joined me and we did a factory by factory look at potential production for 2024 and beyond, but mostly for 2024. I was particularly shocked to hear his analysis of the potential at Fremont. I don't know if you'll be shocked or not, but that was pretty shocking. We discussed the Gary Black idea that the Generation 3 vehicle will come simultaneously out of Berlin, Shanghai, and Austin, but not Mexico. So we discussed that and we got his opinion on that particular. He wasn't completely poo-pooing the idea, but he had his own version of what he thinks about that theory. And now I'll put the card for that episode right here. I thought it was a real strong conversation with Brian. And of course, it was humorous to boot, as it always is. Anyway, tomorrow at this time, Jeff Lutz will be helping me take a look at one of the most important days, probably in the last 30 days, in terms of the impact on the markets. And it will be an impact that will last for the next 2 weeks at least. And then we'll evaluate the Fed's decision and also Powell's question and answer period, which I'll be watching the whole thing for you. And I'm sure Jeff will too. So we'll be opining about what Mr. Powell had to say in that little speech and the Q&A. And then, of course, tomorrow, I'll also let you know about the PPI read early in the morning. Again, 7:10 is when I come on, 7:10 California time is when I come on and give you the morning news at the After the Bell show. All right, so let's see, what else have we got here? We've got joining Patreon would be good. We have liking, subscribing, and hitting notify would be good. And then we have joining Patreon at the $5 or $10 level. And if you join at the $10 level, you get one of these guys for free. If you have a friend, and I know some of you do, if you have family members, whether they're friends or not, if you've got coworkers or buyers that you need to buy for, if you're going to go to a party where you need to bring a gift under $25, you know, to have fun with and to steal from one another, etc. Well, okay, this is the perfect gift. Nobody is going to be expecting this. It will be the most stolen gift at the party. Okay, so $5, I'm sorry, $25, $25 for one, $45 for two, $65 for three, $90 for four, $110 for five. I've got it memorized now. $210 for 10 and $400 even, $20 per person per each if you want to buy 20. Is that right? 20. Yes, 20 of these. So all of that's true. You send it to paypal.me/Randy Kirk, all in lowercase letters or it won't work. And then you, what else? You want to tell me whether you want the camo version or just the regular kind of the stainless steel look. And then you also want to add an extra $20 if it goes outside the US zip codes. All right, I think that's all I've got. Oh, should we take, I mean, after hours, it doesn't move that much. Do we need to look one more time? Up 17 cents now, down 17. It's pretty serious. Where are we going to go tomorrow? I don't know. Not until I see that PPI. And better yet, not until I hear from the Fed chairman and see what he has to say that will either make or break our day, or maybe not. Okay, been great talking to you.